My guest today is Ben Lee. He's a trader. He has a website called thinktradethink.com. We're here to talk to him about what he uses to find good opportunities. So Ben, kind of talk about your key indicator, the key way that you look at the markets to find good trades.
Okay, basically the way I look at the market, I always look at the context of the market. And typically the charts that I utilize are typically market profile and volume profile charts. The way you can really look into the market and view what the interaction between buyers and sellers is by looking at really what the value area is, and really the value area is 70% of the volume that's transacted throughout the day. So as you can see day to day, you can see as volume is either overlapping or higher or lower, you get a sense of where the market can go into the future. So.
Now these charts look a little bit different than most stock charts, right? They look almost like sideways bars.
Yes.
Talk about how you visually see where good opportunities are.
Well, it all started with Pete Steidlmayer. I believe he worked at the CBOT in the mid '80s, and he started by using time as a proxy for volume. So if a particular let's say stock or future or any financial instrument, if it stayed at a particular price for a number of hours, they would say, okay, well, if it stayed there for long enough, there should be more volume. So what they did was it actually created kind of a bell curve, so to speak. So if you guys are familiar with statistics, right? It's just a bell curve. So as there's the one area or the point of control or POC, which is the price where it spends the most time, and then from there it kind of tapers off from there.
So this area, this point of control, this would be a place that would be an area of significance, either a support or resistance down the road or later as well?
Okay, the way I look at it, again, the market is there to facilitate trade. So what that means is there are prices where participants will agree on price, and then there's some where they don't agree. So there's fair and unfair prices. And as a price goes to a fair price, let's say, then that means that buyers and sellers are willing to transact business, right? So imagine if you're walking on the beach, as you wade farther and farther into the ocean, it's going to be harder for you to kind of get through, right? And that's the same thing with the fair price. So price should rotate around that particular area. But let's say for an unfair price, right, where there's less volume, if you're wading, ankle deep, it's easier for you to run through. So that's kind of the same thing as price. So, when I look at, the market and volume profile charts, I look at it in addition to what they call volume composite charts. And what that is, it's basically a chart that shows how much volume is there for a particular price. And it almost looks like, distributions as you kind of go up and down price.
Got it. And then the longer something stays at that price with a lot of volume, that's a significant area maybe for the future at some point.
Yeah, exactly.
Ben, thanks for your time.
Thank you.
You're watching the MoneyShow.com video network.